All right, welcome to the podcast. We have a legendary set of investors here that have invested in zero gravity, but also specializing in investing in the intersection of AI and blockchain. I'll real quick go around the panel and ask everyone to do a quick introduction of themselves. And I'll start with you, Thomas. Give us a brief introduction into how you got involved in this space.
So I got into space by accident, investing to Ethereum. And I know Michael since Stanford years, like 10 years ago. And we've been thinking about doing something together for a while. And we found this really interesting intersection of Web3 and AI. And hence, ZeroG.ai.
Fair enough. Now let's direct it over to Ed.
Yeah, so my background is I grew up as a developer and I became CEO of 3 companies and then became a VC at Hack VC. And we invest in Web3 specific startups, and very proud to be an investor in ZeroG. So we met Michael in the early days when he was raising a seed round. We actually led his seed round in the early days, and we were completely blown away by what the team at ZeroG is creating, and we're very proud and lucky to be investors in the business.
Absolutely. And then Santi?
Yeah, my background is the least impressive of the group. I also stumbled on crypto upon accident. I was a low-life investment banker and really discovered the Bitcoin white paper back in 2012. Been investing in the space since. I guess most recently was a partner at Parify. We were very much focused on DeFi, being very active on chain. I now manage my own fund. I had the good privilege of meeting Michael earlier this year, and really just been becoming more and more interested in AI and the type of applications. And he really stood out as very knowledgeable, and I'm sure we'll cover a lot of that in this pod.
Absolutely. Now, bring it over to Thomas. Before we get too deep into the panel discussion, could you share a bit about your journey, what led you to focus on the intersection of Web3 and AI and ultimately co-found ZeroG?
Yeah, so when Michael and I were brainstorming about the space, and I happened to be an investor beforehand as well, and I invested into a company called Conflux, which was solving the layer 1 problem early on, the infrastructure layer of blockchain. And we noticed that when we were building some application and trying to build an ecosystem, there was a lot of problems not solved. That including, DeFi, including GameFi, and a few of the games, they were even having a hard time to store the data on chain. We thought, wow, there's such a simple problem in Web 2 is not solved in Web 3. Why not we start in that space? That's where we start to look into the data availability and look into the storage. And then we come up with the ZeroG, zero gravity idea. And when you look at data nowadays, and the next big thing, because when you start a company, you build a company, you want to build the next big thing. And the next big thing is definitely in AI, right? And the data is crucial for AI. So, and OpenAI is not that open anymore. And we thought about decentralized the data. And so everybody can contribute more quality data to the space, and we can build an AI for the more open world, and we can build a real open AI, and through what we're building at ZeroG.
Absolutely. Now I'll pass it over to Santi. So talk to him a little bit about what attracted you to the Web3 AI space and why you decided to focus your family office or your investments really in this vertical.
Yeah, echoing what Thomas is saying, I think, when you look at AI, it really is. I mean, in banking, we used to say garbage in, garbage out. So and it really depends on the data that you have, and so blockchains are data rich. They will produce incredible amount of data that is tamper resistant, that is immutable, and so it's very pristine for training purposes. We might be early in that transition, so there's a lot of data that resides in siloed walled gardens. The Googles and Metas of the world. So I think when I think about the applicability of crypto is really good at coordination. And so there are particular historically it's just been coordination around money. You need to transmit value to coordinate. And so when you apply in the context of AI, I think there's discrete use cases that could be really powerful, like, data labeling, for instance. You want to coordinate, you can actually do that probably at scale much more cost efficiently than, OpenAI, for instance, or another AI company, it's similar matter how Deepin has like lowered CapEx, like transferred that cost to other people. I think you could do that, incentivizing people to label data, reinforce human learning as well, and so generally I think AI scales, but it's also incredibly expensive to train these models. And so I think there's an opportunity to do that in a decentralized context, not just for ideological reasons, but like in a more cost-effective manner.
Mm.
Also, I think you want to have certain verification purposes. Like, is the model actually doing what it's intended to be doing? Can you verify that? And I think people want to have agency over their models, whereas you don't really have that with Gemini. You don't really have that with OpenAI, and so they're incredibly opinionated. The last thing I'll say is you can. I still remember a prompt where you could ask like, "What's our best diet?" And it won't even tell you. You shouldn't eat red meat. So it's incredibly opinionated, and so if you think about like how corporations and even consumers are going to use AI, I think there's a real purpose to have real agency over your own model.
Absolutely. I'll direct the same question over to Ed to talk to us a little bit about what attracted you to this Web3 AI intersection. And then even if your perspectives from initially investing in it have changed.
Of course, yeah. Well, so the root of my interest in Web3 AI stems from the market opportunity because as an investor, VCs generally are excited about pretty interesting game-changing market opportunities. So if you kind of look at like the industry reports for where AI is headed, it's estimated that's going to be in kind of like the tens of trillions of dollars of GDP gains worldwide. And a portion of that is coming from generative AI. The rest of it's coming from machine learning and other forms of AI. And that's just a massive amount of value. I mean, if you look at like the GDP of the United Kingdom, it's in the single digit, trillions of dollars. So, this is multiple times that GDP in terms of like the actual impact of the world. And so when you look at Web3 AI, we think that that can be the picks and shovels that powers a lot of this transformation. So what we think is, and we're pretty opinionated about this, but our specific opinion is that the largest market for Web3 AI is Web3 rails that serve Web2 customers. We think Web2 customers actually, in the long run, represent the largest market. And we think the Web3 market is also interesting, but that's more of an emerging market. And that's a market that will become larger over time. So if you look at things like GPU DPINs, like IO.NET, Ether, etc., exabytes, they're driving down the costs of AI inference through lower cost compute, by tapping into underutilized compute cycles, tapping into lower end video cards, things like that. And those types of innovations, when linked together in a decentralized network, bring new economics to AI customers. So we think that that is the underpinnings of layers such as zero G, because if you kind of think about it, right, all the layers of the AI stack in Web3 kind of reside on top of that. So each layer benefits from that actually as well. And so we think that there's economic benefits to AI in Web3. We think that there's benefits in terms of personal identifiable information, not sending that to OpenAI to a centralized company, which a lot of enterprises are just not comfortable doing. There's also censorship resistance because if you look at OpenAI, they self-censor their own models. This is not a country like Turkey censoring AI, which happened but was later reversed, right? This is rather OpenAI censoring themselves, right? The model itself will not predict the presidential election, will not do NSFW content, etc. So the opportunity for open source AI is to address those areas of the market that the traditional corporations might not be willing to touch. And we think by having competition among open source AI models, it'll drive the most value. Because if you look at the history of software, proprietary software has always been disrupted by open source. You look at like successes like Apache Spark, and you look at like DataStax, et cetera, companies like this. These are huge multi-billion-dollar companies that have disrupted proprietary software, and that's been the trend for the last 20 years or so. And we think AI is no different. We think AI is just a special flavor of proprietary software that's ripe for disruption by open source. And we think that the Web3 rails can power that basically, and zero G plays an enormous role in that. So we're generally very bullish on the category, and we think it's a huge opportunity.
Yeah, and kind of piggybacking off of what Ed said about how there's a great opportunity here for ZHG, and I'll address this to Thomas. When you co-founded this, it was in a pivotal time in the Web3 space, and I still think it is this pivotal time. Talk about the unique opportunity and gap in the market you saw that prompted you guys to start this venture.
Yeah, I think one of the biggest opportunity or the challenge also is to bring the next billion users to Web3. And the regular kind of user base for Web3 are still the traders, retail investors, and people who are like playing certain games but not really dedicated to the GameFi space. So we saw one of the big problem was not solved is the data side. And especially when there's a exponentially increased amount of data driving on chain. And there's just no efficient way of doing that. So we have a really talented engineering team, and we have a 1,000x performance improvement compared with Ethereum's dark churning. I saw we kind of solved the problem of data very nicely, and building kind of the fundamental for the future of Web3. And then the second layer is the AI. As a lot of people notice, the strawberry of OpenAI these days, they also had a hiccup in the scaling of law issue because you cannot have unlimited data to train the model and turn the model into a much better, modular for future applications. So we also notice the future actually lie in the reinforcement learning, and also about self-play as well, right? For self-play, actually, the GPUs, as Ed mentioned, we don't need such a 1,000 or 100,000 GPU cluster anymore. We can use smaller decentralized GPUs to do the inferencing. And ZeroG is also trying to solve that as well. We have a small but very talented AI internal team and try solving the GPU inferencing and problem as well. So I mean, like we have a lot of interesting stuff going on with the company, and we're really excited about what's possible in the future.
Absolutely. And I'll address this question to Ed as well as Santi, but from the investor standpoint, talk to us a little bit about the appetite for Web3 AI intersection projects and how it's shifted over the recent years. Do you see trends or market conditions that are kind of driving any changes in the space? I'll start with Ed.
I would say it's very strong right now. It's probably the hottest category in Web3 right now. DPINs are also hot, but I think AI is probably hotter right now. And I think a lot of that kind of is a tailwind from Web2 AI startups. And you look at the valuation multiples in Web2 AI, rounds are going for like 100x, 200x annual revenue, sometimes even more. And that's unusual, right? That's not typical for startups. And so I think the reason why investors are willing to pay prices like that is because they think that these startups will grow into those valuations over time. And because they think AI is kind of like a once in a generation kind of step change opportunity for innovation. Like arguably AI is probably as important as the internet or the mobile phones kind of back in the day, right? Like this is like probably the most significant innovation since mobile phones, I would contend, right? So when you have something like that happens, that's transformational. There are kind of asymmetric economic opportunities that VCs see. So I would say that VCs are very interested right now in Web3 AI. I'd say the interest has increased over time. In the recent month or so, it's tapered a little bit, especially with NVIDIA having their earnings announcement take a little bit of a hit, right? But still, I mean, it's an incredible narrative around how NVIDIA has done, and I think as long as NVIDIA continues to do reasonably well, the rest of the industry will remain healthy. I think they look toward NVIDIA as a standard bearer, so to speak. And we think it's early innings. We think that AI is going to be disruptive in terms of GDP worldwide, and kind of I think the efficiencies that businesses will get out of AI we're starting to see the tipping point of that right now. And so we think there will be economic opportunities for the long term. We don't see this as like a metaverse or an NFT kind of opportunity. We think there's long-term business value in AI. So we think the category is here to stay.
Yeah, and I'll direct that back to Santi. So from the investor standpoint, talk about the appetite for these Web3 AI projects and whether you've seen it shift, and what do you think about the current market conditions? Do you think like this is a trend of increasing investment in the space?
Yeah, I would agree with what Ed is saying. I mean, I think it's the dominant category right now in a pretty lukewarm environment. Crypto still is very much in the kind of no man's land, so to speak. But the investments in the private markets, particularly in AI, have been very strong across different categories. I wouldn't. I think the market's not very sophisticated in terms of making distinctions and how you want to think about the opportunities of like decentralized compute, something like IONET, um, versus other so it's sort of like the mandate is very much AI is going to be very big. It's like very top down. So like we have to be exposed to the category, and then like let's just invest in whatever comes our way. I think that's a hallmark of a pretty hyped kind of part of the cycle, which is very hyped. It's just very early. I mean, you also, to be fair, see a lot of excitement in traditional VCs that are investing in AI. And really, most of that VC dollars have been going to buy H100s. And so the biggest winner in this kind of craze is in this kind of like, has been NVIDIA. Right. And so you almost wonder as VCs, you're better off buying NVIDIA stock versus like a lot of these companies that are, just becoming customers of NVIDIA. But I think in the cryptos landscape, there's a lot of excitement. I guess I've been cautious in certain categories of this at this intersection. I've made a number of investments this year. Probably 40% of my like venture dollars have gone into a number of these companies, including Zero. But but yeah, we're this is a classic like hype cycle part phase, and you it's just going to be a thing, I guess.
Yeah, and honestly, you talked about this a little bit earlier about specifically some of the problems that CRG is tackling in the space, namely like the amount of data on chain for these LLMs. Like it historically could not support that. So could you break down some of the core problems you see and like how you guys are not only addressing them in the short term, but also have this long-term perspective as we try to bring more people on chain?
Yeah, that's a great question. We we're starting with the data availability infrastructure, and I believe we have some of the best parallel computing engineers within the team. So we're building a really strong foundation model around that. And once that is solved, we believe in AI should be for everyone, as we believe in open source, as we believe in decentralization. So we will try to build a really friction-free development environment. So anybody, not only the most talented engineer, but also even 10 years 10 years junior student can building on top of a 0G with whatever modular we can come up with. So we'll become a plug and play kind of development space. So this is what we're also building for the next steps. And in the long run, we really hope 0G can become a trust place for people to upload their even private information on there, and even gain profit and benefits from sharing their data and train the AI for the better.
Yeah, absolutely. And Ed, I know you invest in a lot of these projects. You're obviously one of the investors in CRG. Talk to us a little bit about what you saw in Zero G and why you decided to invest. Like, what kind of problems did you see them being really crucial to solve?
Well, at HackVC, our thesis is to invest in great teams in big markets. And obviously, AI is an incredible market, so it checks that box very quickly for us. As far as the team, we thought the team was a combination of fantastic people. I mean, if you look at the typical ingredients for a founding team, you've got a business co-founder and a technical co-founder. In this case, the technical team came from Conflux, which is a layer one blockchain that I had invested in years ago, and we were very happy we invested in Conflux. It did quite well. And the team was based out of Asia and had incredible expertise in terms of building. What they lacked at Conflux, in my opinion, was someone who was strong in the West to help with go-to-market and building the Western business. And when Michael joined forces, Michael, the CEO of Zero G, joined forces with the Conflux team, it was the perfect combination because you had a business founder that was accomplished. He had built a kind of a pre-unicorn in the Web 2 world before joining forces with the Conflux team. and just incredibly well spoken and charismatic, I would say. And so, we basically invest in people at Hack VC. We think people over products is the right decision because products can change over time, but people don't change. So it's a combination of conviction in the technical team from our prior investment plus our conviction in Michael as the CEO. And the problem that they were solving as well was also very interesting to us because from the data availability layer perspective, there are certain use cases of Web3 that really demand high performance data availability and low cost data availability. And Zero G's vision was to kind of corner that part of the market. We thought that part of the market was underserved. And so whenever you create new economics for customers, we think it's a very interesting opportunity that tends to drive adoption very quickly. So it checked all the boxes for us. It was a very easy decision for us to invest.
Absolutely. And now we heard a little bit about Ed's evaluation criteria, looking at the team, looking at some of the ways that he looks at investments. Now I'll direct this over to Santi. Talk to us when you're evaluating a project. What are some of the non-negotiables you see as an investor? How do you evaluate a project being good for investment?
Yeah, similar to Hack. I mean, I like to invest in fantastic team at the earliest of stages. Sizing the market is an interesting exercise. A lot of times in crypto, I mean, it's top down. It's very referential. The value accrual is still TBD. That the way you monetize is TBD. So I think it really starts and ends with is this team going to execute and out execute other teams? I think it's very hard if you're not technically competent. The rate of and the pace of innovation is going to be hard, especially in open source context where people can copy your code base. I think the true moat is this team just competent and far superior from a technical standpoint than all the others. So I would say that's like very very non-negotiable. Ed said something which is very true. I have invested in solo founders. I think they can be successful. I do prefer the combination of similar to Zero G, right? You have a combination of technical plus deep appreciation for the crypto market, and the crypto elements. So I think that's what you want to see. And in terms of non-negotiables, I think it's very clear in like the first 5 minutes of a conversation if a founder can deliver a key insight. And the way I would define a key insight is once it's been said, you can't not think about it, and it becomes so obvious that you're left wondering why you didn't think about it before. And I think those are the kind of teams that if they can deliver a key insight, it likely is a hallmark if they've been thinking about a problem for a while. So in this case, as Ed mentioned, the Conflicts team had a deep appreciation for crypto property, just being in the market for such a long time. Plus Michael, spending time at Stanford and really understanding from a technical standpoint how you can actually deliver, must and drive cost efficiencies at the DA layer at the intersection of a really good time. And so I would say like what you don't want to do, and this is the last thing I'll say, is pretend that you know everything, because particularly in something like AI, which is really fast pacing, and crypto, which is very much early as a whole, you don't want a team that pretends to know everything, because it's actually, I think that predisposes you to do really dumb stuff. And I think you want a team that is just very aware of a key insight, but appreciates that there's so many things that are going to unfold over time, and you just sort of believe they're going to be at that intersection. They're going to out execute. They're going to pivot. And for that, I think it begins and ends with technical competence.
Absolutely. And let's go into decentralized AI, because if people are listening to this podcast, I assume they're pretty bought into the idea of decentralized AI. But for people that may be on the fence and are like, hey, like, why can't I just trust, OpenAI, and why can't I just, have Google have all this data? Talk to us a little bit, Thomas, about why this decentralization is really essential for the future of AI, and like, what are the exact risks it's mitigating?
Yeah, I was born and raised in China, right, from a very centralized government system, and that's one of the reasons why it's so fascinating about blockchain. Is also decentralized AI, and number one is about reduced centralization power, and we really hope the powerful AI won't be only given and controlled by a very small number of big corporations or even governments. And that's not something Atlas for Zero G want to see. That's number one. And number two, I think it's also help to protect privacy as well. And the decentralized system can allow for more localized data, and that reduce the need for sharing sensitive data with centralized authorizations. And third, I believe is also more resilience, not only for company but for the technology itself. And I mean, very obvious decentralized network is always more robust against single points of failure of attack, for instance. Yeah, I mean, like I personally just believe in the democratization of AI. I don't want to see any one company or one country kind of dominate that in that particularly strong and powerful technology.
Yeah, and I'll direct this over to Ed. So talk to us a little bit about, why invest in decentralized AI. It seemed like earlier you talked about how open source will eventually overtake, these closed source models. Talk to us a little bit about like your investment thesis there. Like, is it so important that everything is decentralized, and is it more of a safeguard against centralized risk? Or talk to us a little bit about like your ideas here.
Yeah, sure. So we think the future of AI is going to be smaller grained models that do discrete tasks very well, that are specialized for certain use cases. If you kind of look at like the general purpose models right now, like a Llama 3 kind of model or an OpenAI model, those are general purpose models. They're very large. They don't fit on a single video card's VRAM. And they're like a jack of all trades model, right? We think there's an interesting opportunity to build a very deep and valuable model for specific use cases. And we think the natural home for that is open source. But if you think about open source, you're encouraging developers around the world who have like an interest in a certain domain to craft a model for that domain and then to monetize it. And where Web3 comes in is that Web3 can be the rails for monetizing that open source model. So if you think about it, an open source model could be monetized in Web2, right? You could build a SaaS company, and then you would have to build like a free version and then the enterprise version of your open source model, right? You might withhold some things from the enterprise version and keep it back for the, for paying customers, right? So the open source version is typically not as good as the enterprise version. But that's like a very hokey solution, right? Because you're withholding value from customers. It makes the open source adoption more challenging to withhold that value from your free customers. And maybe the model will never catch on, right? Because you haven't delivered enough value there. On the contrary, if you put too much value in the open source version and you don't withhold enough in the enterprise version, then no one's going to pay. No one's going to buy your service, right? So we think Web3 solves for that. Like one way it can solve for that is you can actually tokenize your model. You can have kind of like an initial coin offering around your model and have retail investors being bought into your model and owning a piece of the model and also owning a piece of the revenue that comes out of that. And then you can also use Web3 Rails to have decentralized hosting of these models and to offer that as kind of like a paid service to customers. So there's lots of projects right now in Web3 that are making progress in these areas. And so we think it kind of like provides a home for commercial open source in Web3 that's very interesting. And so that's kind of like one possible future is like fine-grained models that you kind of stitch together almost like a daisy chain. And maybe your AI inference job is a combination of these smaller grained models to accomplish a larger goal. And maybe you as the customer also fine-tune your own models and augment the open source public ones from there. And that's the ultimate combination. So that's at least how the history of software development has gone if you look at like past open source movements. And so we think AI is going to be no different than that.
Yeah, and I'll direct that over to Santi as well. Talk to us a little bit about this decentralized AI, the importance of it being decentralized, and whether it's similar to this like many models theory that Ed has. Talk to us a little bit about your thesis here.
Yeah, just to complement what I was saying, very much agree there. I think one element is when you think about AI agents, they're likely going to use stablecoins to transact, and it's just they can't KYC, so naturally you use crypto rails, and so you can envision a whole economy around that, and them probably being the largest drivers of stablecoin usage to transact among themselves and to just do operations. The ability to do smaller models, I think, is a really good one. I think that requires, again, agency over your model. The verification piece becomes really important. Is the model, again, doing what you asked it to do? Having the ability to train it on your own data set versus not relying on a very opinionated centralized party like OpenAI or Google. So I think that will just become more and more important. I think in crypto we tend to get stuck in ideology, and look, we all are here because we believe in certain core properties of crypto. But I think the reality is technology is incredibly centralizing and has been. And AI is likely can be and can unfold in a very be even more centralizing when you think about the actual cost for training of these large models, generalized models. But again, like when you think about like there is a possibility here where crypto is the solution to counter that like gravitational pull for centralization purely on an economical basis. Like you can just perhaps train the model, incentivize it. There's a coordination layer for you know reinforced human learning, and like paying people, incentivizing them to do labeling or whatnot, and then the model becomes just a better product than what you have in a centralized version because you can do it in a more cost efficient manner. The idea of like tokenizing a model, and making open source a more commercial solution has always been like a core property of crypto. And when you think about the value accrual of the internet, it just happened in the top parts of the stack, right? In apps like or companies like Google, Facebook. But now you have the ability to tokenize and create a very vibrant commercial open source solution. And I think that's just going to unfold in a very interesting way with AI. And so it's not just ideology, I would say, and I think there's very tangible and clear reasons why you can create a more commercial, a better product than what you will than what a centralized party can offer you. And so that's really exciting. You look at Akash, or like just this marketplace for GPUs that transcends geographies. You can use stable coins. So that's one particular use case you're already seeing now, right? And so really utilizing, free compute and creating a more efficient marketplace is something that people are already using today. And so, it's real, it's happening. It's not all hype. And I think that will just continue to persist in other verticals of sort of this AI economy.
Now, as investors in Web3 and AI, obviously we want more startups to get into the industry, but there are obviously some clear challenges with doing AI on chain. So, Thomas, talk to us a little bit about some of the unexpected hurdles that you guys faced when building Zero G, or that you see other companies in the space really dealing with, and how you're able to mitigate some of these challenges you all faced.
Yeah, one of the challenge we're facing is, both Web3 and AI have experienced significant hype cycles, especially in the recent couple months. It's the hype versus reality. So there might be projects really able to capitalize on buzzwords without really demonstrating real-world utility or problem-solving capability. And coming from the background conflicts, we're actually a group of nerds and engineers. We're not great at marketing. So that was the first kind of unaware hurdle we faced. Luckily, with Michael's help and the team, we were able to generate enough buzz and helped us to win excellent marketing talents. And starting with Ada, right? Ada was the wife of Michael. we kind of grabbed her into the team to work on the marketing side for us because we really lack of marketing initially. And then second, I feel like it's the same challenge for all startups. It's the talents. And we know finding excellent engineers is already challenging, especially with a team of previous IOI gold medalists. They're only looking for the best of the best. And looking for people who not only have experience in AI, but also in Web3 is even more challenging. We are slowly solving that problem. but luckily we have a strong and well-established base from the engineering team of Conflux.
So now I'll direct a very similar question over to Ed. So talk to us when you're investing in these companies and you see people come through. Talk to us about some of the challenges founders are facing in this Web3 AI space and how you're recommending they address these.
Yeah, I mean, I would say that one of the biggest challenges is just assembling a high quality team that's both AI native as well as crypto native. Those two things together don't often exist. There's usually a data scientist who has experience from that from the Web 2 world, or someone who's built a Web 3 project in the past that has experience with decentralized networks. But the combination of that is fairly unique, I would say, because the industry is so new. So we always recommend just hiring smart people, not choosing ability over experience. Because if you think about it, right, if you hire someone who has all the experience in the world, but let's say they're not like the best culture fit and they might not have the most ability, well, guess what? 6 months from now, they're going to have not that much ability and not a great culture fit, and they'll have that experience. Whereas, you hire someone who has a lot of ability, maybe they don't have the experience. 6 months from now, they'll get that experience. Like they'll learn on the job, and then they'll have it all. They'll be a good culture fit and good experience. So that's kind of, we think you probably can't easily hire for those two things in combination right now. That is one challenge that Web3 founders are facing. Another challenge they're facing is just building a good community. So we'll talk about that a little bit later. But the typical profile for a Web3 AI startup is fairly technically heavy, right? Most Web3 AI startups consist of very much an engineering heavy team, and they may not have as much experience building their community. So that can be a challenge for them to kind of up level their DNA, and not all technical founders are able to effectively build a community. So sometimes they need to just hire that capability from the outside and to augment their DNA internally with those external hires. Fundraising is not super tough in this environment, in my opinion, if you're building a Web3 AI startup. As long as you have your act together and your narrative together, I think that's probably one of the least important challenges right now. I think, for those founders who are struggling to fundraise, we always recommend to them that, it's fundraising is usually a fallout of building a great company. So typically you want to just think about how do I build the best possible product, and the fundraising is usually a fallout of that. So, so those are some of the challenges that we're seeing. It's not too different than what you see in non-AI startups actually in Web3. It's common challenges across the board that founders have. So hope that makes sense.
Yeah, and let's talk a little bit, and I'll direct this at Santi, because we have a few questions that are around like narratives and trends. Let's kind of condense these all, because we've mentioned AI agents. I think that's an interesting area. But Santi, talk to us a little bit about some of the innovations you're seeing, some of the things that you're really bullish on in the future AI ecosystem.
Yeah, I wanted to start maybe in things I'm not particularly bullish on. So, for instance, like the ability, like these marketplaces for decentralized compute, I think are solving a temporary bottleneck that it will be a thing, but I think the size of the market is something that I was cautious of, particularly at the valuations that they were looking to raise. And so it is going to be a market. I mean, there's an opportunity to create efficient price discovery, rent out GPUs in multiple jurisdictions, but like colocation is very much a thing. And so for certain use cases, plus, the bottlenecks for like getting your hands on an H100 is acute, and I don't think it persists over time. So when you combine those two things, I was just cautious on like those type of that particular use case. It can be commercially viable, but can you support multiple players with multiple billion-dollar valuations? Probably not. So that's an area where I just sort of did not make a very conscious decision not to invest behind these companies. But I do think, oftentimes I ask the team, so what's your actual product? Like, who's your customer? And I think AI is going through that evolution where, very few teams can actually answer that question. That's just the state of the market right now. So yeah, AI is going to be a huge thing. It's going to create trillions of value, but where's actually that going to accrue? And how are you going to fit into that economy? I don't need to hear a perfect solution to that. But, for instance, I invested in Exo Labs. They're doing, inference on the edge. Like you can have your, these small devices, and you can actually run small model on them, in your idle iPad or not, an iPhone or whatever that you're not using. So that's pretty cool, both from a privacy standpoint, but also from a cost standpoint. So that was a company that I'm really excited about, and they're doing interesting things. What the product is going to be and who the customer is going to be, I mean, I think it just lowers the barrier to get started and use these models at home, but also even for companies, right? Where you want to have your model locally, you don't want to send data to a third party or whatnot. You want to just run the model locally in a very cost efficient way. So that's just one example of a company that I'm particularly excited about. Um, and I mean, there's others. I don't want to, talk about my portfolio just for the sake of talking about my portfolio, but I hope it illustrates just generally, for instance, even Exolab, go talk to the founder and be like, Mohammed, and be like, Mohammed's like, so what's the actual product? Like, is this just like a hobbyist thing? It's like cool to run your model on the edge. Like, okay, but how do you think about, monetizing that and creating a big company? And, you know, a lot of it is still on the come, and I think just figuring that out and navigating that is both an opportunity and a challenge for many teams. But
Absolutely. I'll address that same question over to Ed. Like, what trends or narratives are you bullish on? And then on the reverse, what are you not particularly bullish on? I really like that question from Santi.
So one thing that we're particularly interested in at Hack VC is tapping into lower end GPUs for AI inference to skirt the need to use an H100 or an A100. Because if you kind of look at what it consists of an H100, the GPUs on an H100 are actually not as powerful as an RTX 4090 from NVIDIA. They just have a lot more memory. And then there's NVLink and InfiniBand technologies which connect the GPUs together so that they can actually coordinate and process a large model. So we think that the raw GPUs on the consumer grade hardware are actually more powerful than the high end H100, which is really shocking. So we're going to think about that, right? Why are they not being used more? And we think that that's an opportunity for startups to take advantage of. So that's an area of interest that we're researching and investing into. And we think that will also drive down costs. Because if you think about it, right, what in my experience, I've been an investor now for 15 years across Web 2 and Web 3. And the number one common trend that I've seen is that when you bring new economics to customers, either by saving them on costs or bringing them new revenue, either of those two things, that tends to make purchase decisions very quick and tends to lead to short sales cycles and fast customer adoption. And I've seen this in the history of my portfolio. It's been like probably 300 startups I've invested in over my career now, and this is the common pattern I've noticed, right? So we think the Web3 AI opportunity is to bring those new economics to customers, both in the Web2 and the Web3 space. And so we think that there's two different layers of savings here. One is tapping into underutilized compute cycles from hardware that may not be fully utilized today. By the way, this is both consumer and H100s, because if you think about it, if you were to rent an H100 from NVIDIA, say from Amazon, right? Amazon requires that you rent that H100 for an entire year because they have pricing power because the market is so saturated, is not saturated enough, with customers. So as a result of that, you have to rent this H100 for a year. And then during that 1 year window, you might not be fully utilizing your H100. There might be extra cycles available. So you can actually recoup some of that cost back through these GPU deepins. So we think that's interesting, but we think that the consumer opportunity is even more interesting because there's all this latent hardware sitting around on desktops that have a permanent internet connection. It might be a gamer desktop where someone's at work during the day and the hardware is completely underutilized, right? So there's the tapping into those extra processing cycles, but also using that lower end hardware to do higher end AI inference. Innovating in that area is a second layer of economic savings. You combine those two together and it's a massive savings compared to Web 2. So while I agree with Santi, we are in a temporary moment in time where there is bottlenecks in terms of shipping hardware from NVIDIA. At the same time, we think even in the long run, as things play out, we think there's going to be opportunities to save on buying hardware by tapping into hardware that is the right hardware for the use case and also might be underutilized, similar to like how Airbnb taps into underutilized apartments and houses. So we think that might have a long tail to it. Just if you're bullish on the projections, especially for Web 2 AI, McKinsey projecting in the tens of trillions of dollars, we think that there may be an opportunity for multiple startups to succeed in this category. just given the size of the market. So, again, this is still a prediction. It remains to be seen, but we're still interested in the space for that reason.
Jackson, say one more thing.
Yeah, absolutely.
I want to. There's a really good paper actually by the founder of Exo, and he goes into a primer of saying, okay, what is AI as a standalone category will work. What does crypto bring in AI that is like enhances what AI without crypto can do? So you think about products that are enhanced with crypto properties. I think that's AI agents, like can use stablecoins. So all of a sudden that unlocks certain friction. What are some of the use cases in crypto that are enhanced with AI? Well, you can think about using AI to create a bot to snipe meme coins, so to speak, or like from a DeFi standpoint, trading standpoint, trend following, whatever, just an AI. So like I think it's that. Whereas you could think of an intersection of like what is uniquely enabled at this intersection. And so it's like three buckets that you can think about, AI plus enhanced with crypto properties, crypto enhanced with AI elements, and then the combination of the two that was not possible on a standalone basis. And so I think the latter, the last category is probably the one that is more out there, but there will be probably really valuable companies to get started. It might be a next cycle kind of thing. It might be 10 years out. But as a venture investor, I think that is the category that gets you most excited. But it's really hard because I think we're generally just quite early on that. And while the first two categories are easier to understand, they're very much like here now, and you can invest in them, and they might be really good businesses. And that some may or may not be venture scale.
Yeah, and we'll pass it over to Thomas real quick to give us what you're bullish on, and even if what you're not bullish on as well, if you'd like to throw that in.
I'm very bullish on us. And I feel like AI is still in the beginning. And similar as Ed and Sandy said, and right now AI is still too expensive for everybody users. And the latency is still too slow. It's not fast enough for us to get immediate responses, and can only solve in certain user cases that specialize, like self-driving. This is one situation. Cannot solve like generalized problems, like human-like robotics, for instance. But for us, I think the great potential comes with great responsibility. And Zero G is we're very fortunate and lucky to be in the intersection of Web3 and AI in the very early days, and we are seeing the future, and we want to help to shape the digital future together, and to create the AI for everybody, and create more open, more transparent for everybody.
Absolutely. I know we have some hard stops coming up. So real quick, thank you all for listening. And I'll go real quickly around the table and ask where everyone can find you online. So Santi, where can people find you online? Shout out any social medias, any websites, any places?
Yeah, I'd like to keep the conversation open. So Twitter is the best place. I've actually tweeted. I often tweet about requests for like ideas. And so oftentimes I'm invested in teams that just comment below and, hey, I'm building this or that. So Twitter is probably the best place to get a hold of me.
And what's your handle?
Santiago Roel. I'll link it.
Perfect.
And you can find me on Twitter at x.com/ed_Roman. You can also email me at ed@hack.vc.
Finally, Thomas?
Thomas at zerog.ai. And you guys can also find us on Twitter, X at zerog/labs.
And if you guys are listening, give us 5 stars, please. You must really like us, or maybe you like just like Santi, and do engage with this. So I thank you all for listening, and keep it being excited about the future of Web3 and AI.